Alright guys, today what we're going to do is I'm going to show you one simple strategy that you can use employing market profile to trade cryptos. Not something that everybody uses for cryptos, I know that, and what we're going to do is try and expand people's scope of opportunities and the way that they approach trading different markets. So this could be something that gives you a little bit of edge in a market where other people are not looking at this. Now, this one simple strategy all revolves around the concept of a stretched market. Now, I'll go on just a moment and explain to you what a stretched market is, but as you can see popping up right now, this is what we're kind of looking at. We've got a stretched market there. We've got two examples of this. And I'll show you this in a moment on Tradingview as well for those of you who are using Tradingview so you can see just what it looks like. Let me go and explain to you what the idea of a stretched market is exactly. What a market profile will show you is where value is. Unlike a candlestick chart, profile actually shows you not just where price has been, it will show you where price has been, but most importantly, it shows you where value has been. Now, the whole concept of a stretched market is a market that has moved a long way away from value without shifting it. So if you think about this in terms of sort of normal real life things, value would be let's use the example of say a can of Coca-Cola. You buy a can of Coca-Cola, you've got a rough estimate of how much that costs. Now, if you go into any shop, you will probably pay somewhere around about the same amount. So it's not always the same price, but it's roughly. That's a good estimate of what the value is of a can of Coke. A stretched market is where suddenly you have a shop that sells it at a much higher or a much lower price. This is not necessarily indicative of everybody's view of the value of a can of Coca-Cola, but people will trade at this price. Imagine that you are really, really thirsty. You really need a drink. And the only shop is pricing cans of Coca-Cola at double what you would normally expect. The problem you've got is you're really thirsty and you really want a can of Coca-Cola. So you will buy it. This is a stretched market here because the price that you have just paid is not indicative of what the value is. More so, it's indicative of your urgency or your desire to trade at that price. And this is the whole concept that we're going to look at today in using a profile to show you whether a market has got the ability to keep on going. Essentially, a stretched market cannot maintain the movement. Just because you paid a high price for a drink does not mean that generally other people are going to come and do the same. And that's the whole concept. Now, what we need to think about then is how are you going to trade around this? So if you think about this from the perspective of the market's gone too far, the obvious trade here then is to try and play the market back. You want to be trying to get the market to go back to where it came from, to where value is. So value gives you a target. And this is where people get lost with certain types of trades, that what you've essentially got now is a target without necessarily an entry point. And this is what a profile will help you do. Profile tells you where the market's going to go. It gives you context. It gives you understanding of what's going to happen, where the market is likely to move to on any certain day. It's not going to tell you precisely what price to trade at. And any kind of system or signal that does that ultimately is unrealistic. That nobody's going to be able to pinpoint the exact price that you want to trade at. More so, what they're going to be able to do is give a rough idea or a rough setup. If your market's stretched then, what you've got in terms of information is that 1, the market's gone too far. 2, value is much, much lower or much, much higher. So therefore, you have got a clear target. You know where the market should be going to. What you've now got to do is establish a way to get into that trade to play it back down. So what the profile is essentially giving you here is a high probability situation. Now, you've got to go one step further and say, right, well, I've got this high probability situation. So what it's now helped you do is direct the trades that you're taking. No longer are you looking on a more simplistic basis of look for one setup, then another setup, then another setup. Instead, now you're looking for, let's say a market is stretched to the upside, it's traded away from value up. Now you're looking for an opportunity to sell. So all of a sudden you can bring out those tools that allow you to play a reversal. You've got a false breakout trade. You've got things like reversal type setups, a head and shoulders setup, for example. Any of these types of setups now have suddenly gained a huge amount more strength, more power. And so you can dismiss anything that suggests maybe the market could go higher because clearly there has not been acceptance of those prices. And that's the whole concept of value. So now you're coming into this with a clear idea of what you want to do, with a clear concept of where the market can go, All you've got to do now is find a trade. And this is where the value of the profile comes in, because you're not questioning what you're going to do anymore. You're clear on this. So now, whilst other people are wondering which way the market will go, you already know this. You're already one step ahead. And now you can start looking for an opportunity to get into this trade, to play the market back to where it came from. So I'll bring up a couple of charts now, and I'll give you an example of this and talk you through what exactly you want to be doing, how exactly you want to be going about taking this trade on. The other big key here is that it gives you options. That's crucial. There's not a one trade or one opportunity. There are multiple opportunities to take this trade on. So you've now got options and clarity of what's going to happen. So I'll switch over and get the chart up. Let me show you. Right, here we go then. This is an example using Bitcoin, and this is one from the 15th of August. Now, what you've got on the profile, which is the chart on the left, what the profile is showing you here is value very clearly established lower. Value is highlighted by the purple area on the volume profile, and then anything outside of value is highlighted in pink. So the important thing here, and this is how you're going to identify this trade, that up here, what you've got is a close miles away from value. Value's all the way down here. So now straight away, the next day, you're coming in thinking, I know where this market's going. I'm going to play it back down, looking towards sort of 46,670 type area. So that's where you're going to go with this. So now your job the next day is to come in and you're looking for, and this is the stretched out of value, and this is what's caused it. So another identification of this trade. This is the crucial bit. You've got to understand how to identify this trade. So you see the market trading up, and then you get this big stretch late on. This big stretch is essentially that person who is desperate for a drink and now suddenly is willing to pay a much higher price than anybody else who's accepted that this is around about what the average price is. So now you're coming in thinking, right, this is going back. It's going back down here, sort of 46,600, 46,400 area. So how do you play this? What are we looking for? Well, your first opportunity is up here. You're looking for anything that gives you a false breakout. Break of this high is unlikely to continue. You know this because nobody else is likely to come in and pay such high prices on the back of acceptance at lower prices. So straight away, you don't want to get caught up playing this little flag that you can see here, or this little pennant. You don't get caught out doing this because you know that this doesn't have a great deal of, or a great likelihood of actually working. Instead, when it breaks and you get a few other people who you can now see are making a mistake in paying these prices, start buying, and we then start to reverse back through yesterday's high, here's your opportunity for a sell. Once you close back inside yesterday's range, there's your chance for the sell. Now you've got yourself a great position with a clear stop, and your target is then to come all the way back down here. It's a very high probability trade because this is where the market wants to trade. This is where people have been willing to trade over the last couple of days. This is where we should be heading back to. If you haven't taken that though, this is okay. And this is what I mean about options, that the profile keeps you focused on where this can go. So then following the false break, we get another test higher, and this goes up to around 47,799. So call it 48,000. We trade back up there, we trade lower, we trade back again. Now you've got the opportunity to sell this kind of short-term sort of double top pattern, or at least the point where that we're holding below. So you can sell 48,000, or alternatively as well. And this is what keeps you then looking for opportunities to the downside. You get this head and shoulders pattern break through the trend. That gives you the move back down. That gives you this move on the profile. Now, all the profiles showing you here simply on the split profile is each 30-minute period. So every one of these little, or each of these little strings of dots that you can see here, typically they would be shown up by letters, but with Bitcoin, it's so vast in the range that it trades, you do have to show it as dots rather than letters. But what you're then seeing here is this rush lower, this rush straight the way back down towards value. That gives you your target. Get back down anywhere into this area, and that's where you could be looking to get out of the trade. Using the time-based profile, you can see where all of the time has been traded just in here. And this is then the point that you could target as a specific target. So that's one example. Now, I'm not going to just give you one and say, oh yeah, look, this was the one time that it worked. We got a very similar opportunity only a couple of days later. And these types of things do also, as an extra hint, come about in a reasonably quick basis. Once you get one, you will often get more of them. Reason being market is clearly at a point where it's getting overstretched because people aren't exactly sure where they think the market should be trading. So we go a few days later, and in fact just 2 days later, you get a similar type of situation. Slightly less stretched, but you see once again very clearly on the profile that volume in terms of the amount of contracts traded per price has not moved a great deal here. This has not pulled value lower. Value again very clearly all the way up here, this time at around about 45,800. So this is now your target. We know where we've got a target. Same principle. You're now looking for some kind of reversal type pattern. In this case, once again, another false break. You get an attempt lower, and if nothing else, the profile has saved you from trying to play any kind of continuation to the downside. Quite simply because price is not going to continue lower if people are happy to accept it at a higher price. And so therefore, anybody who's seeing prices down here, this is like a sudden sale in a shop. You've now got bargains compared to what everybody was normally happy to pay for a certain item. Now you're getting an opportunity of a bargain. If you wanted that item when it was up here, you definitely want it when it's down here. That's the way you've got to think about this concept. Now that you've seen this, you're thinking, right, we are, again, a long way from value. The market has got stretched. The move away from value has been late on, which again shows desperation. People need to sell at lower prices. And so straight away now you're thinking this is going back. We get the opportunity to buy it. False break, back above previous low. There's your entry opportunity. Now, in terms of options in getting into this trade, you don't get a great deal, many more options here. Instead, what you do get is pretty much sideways trade for a while. And you do have to sit these trades out. You know, profile is not going to tell you exactly how quickly you're going to go back there, but it's going to tell you you've got a very high likelihood of going back there. And a likelihood is much better than whether something's going to do something quickly or not. So now, as we consolidate in here, you can still be looking for opportunities to buy. Get up above 45,500, and that gives you the final rush up, the final sort of $300 all the way up to 45,800. So that's how you're using a market profile to establish where you want to trade and establish direction and a likelihood of movement using profile. Now, you don't have to do this if you haven't got a market profile. That's fine. And I know that for many people, they use Tradingview. And so we'll now go and have a little look at Tradingview and how... Right, if we go and look at it on Tradingview then, we've got the same concept. And so those couple of days that we were just looking at with a market profile, you can do exactly the same with a volume profile. And the volume profile, market profile go hand in hand. Nowadays, I would actually suggest that volume profile is more important, simply because volume profile shows you where trades have actually happened. So what this is giving you is volume at price, and this is the stretched move away. You see that late on in the day move, market gets stretched higher. Yes, we do see a little bit more volume up here. This is the cash rather than the futures. A little bit more volume higher up, but you can see that stretch. So this is now giving you the opportunity to roll back down, straight the way back down towards where value was. Value simply being where the bulk of this volume's traded. And if you want to pinpoint price, and this is what profile will give you, pinpoint price, you're then looking at the highest volume traded price. So the volume point of control, or VPOC. On the cash, it's even more stark. The false break, you get this zip up above yesterday's high. As soon as you fall back into this range, there's your chance to sell. You're looking to sell it as we drop back through these lows, and that then gives you the wash straight the way back down, straight the way back to value. So that, there you go, just gives you that really simple concept that a market is not going to be able to push away from value for a consistent period of time. And so therefore, just because the price has shifted one way is not indicative of a move continuing. If we go over to the other example that we looked at, here we go again. Same kind of concept. Value is left all the way up here, and the lighter colors on this profile indicate where the bottom of value is. As it gets darker, lower down. So again, stretched out profile down here, you're looking for the same principle. False breakdown, time to get long. And the idea of the long is to then play it all the way back up, straight the way back towards value. So this is how you can use one simple concept on a market profile to enable you to trade cryptocurrencies. You can also branch this out into any other market as well. But it's all about the idea that a market is not going to sustain high or low prices without value shifting. And value only shifts when people continue to trade at those same prices. So remember the can of Coke analogy. It's a very easy way to remember this kind of concept. And next time you see that stretched market, you've now got an opportunity to look for a trade back towards where value once was. So there you have it. One simple market profile strategy that you can employ in trading your cryptocurrencies. Remember the can of Coke analogy as well. This will help you next time you see a market that looks stretched. You can see it on the profile, you can identify that. And you now have a very clear expectation that the market is going to run back to where value previously was. Quite simply, a market is not going to stay at higher or lower prices without continued trade at those prices, enabling value to shift up. As long as value shown by the market profile or shown by your volume profile does not shift up, then you've always got that high probability of getting pulled all the way back down to where value previously was, where people were previously happy to trade those prices.